Good afternoon, everyone. Bill Ulivari here. I'm the owner of Senecal Capital Management. We're a state-registered investment advisory firm here in Illinois, and also the sole content creator for the Blockchain Advisor Spotify podcast. And what I wanted to do is just share my screen. And this presentation is designed for investment advisors who are asking the question, is Bitcoin a good investment? And what I'm going to do is share my screen with you. See, it's 151. So we're going to keep this to about 10 minutes. So let me share my screen with you. So first thing I want to say is, even though I'm an investment advisor, I am going to give the proper disclaimer, regulatory disclaimer, and that this is a presentation designed for investment advisors and is for informational and educational use only. It is not to promote ProShares or GBTC, Bitwise, BitO, the Invesco products, and of course, cryptocurrency, as well as all assets and exchange traded funds, whether it's fixed income or equity. Past performance is no guarantee of future success. Well, having said that, I think we crossed our I's and dotted our T's. Again, this is just for informational purposes only. And if you'd like to look us up on Spotify, do a search for the Blockchain Advisor. Make sure you follow us and click on the little alarm bell so you can be alerted when new episodes are uploaded. So the first thing I want to do is just say, is Bitcoin a good investment? And the question is, it depends. Are you a forward-thinking investment advisor? Do you have clients that are interested in having a non-correlated asset class? If you ask ChatGPT, is Bitcoin a good investment? It will give you the very similar regulatory disclosures as I just gave you. I'm an AI tool. I cannot give financial advice. Bitcoin is volatile. It's a decentralized, unregulated product. There's a lot of downside to Bitcoin, but in the very last paragraph, it offers a conclusion saying, if you're interested in achieving potentially a high rate of return, Bitcoin might be an investment that is interesting and something you should look at. So again, my goal here is not to promote Bitcoin per se. It's just to have a conversation with you, an investment advisor. So as an independent, I use a platform called Riskalyze. Riskalyze is very similar to it. It gives financial roadmaps. It's easy to use. It has a great user interface. Clients like it. There's embedded behind the pretty colors and the great reporting is actually some high-level analytics. And so the goal really for Riskalyze, what I use for clients is, let's set up our guardrails. Are you okay with the market theoretically being down 12% if you could make 15? Would you be interested in losing 5 if you could make 10? Would you be willing to lose 10 if you think you could only make 8? So it's all these questions in a brief 5-minute survey of what is your tolerance for risk on an emotional behavior. Because the truth is, if you can talk your clients off the ledge when the market is going down for like 6 months, statistically, they will not do any harm. They will not euthanize their investment roadmap. We know that the volatility of the market, sometimes it gets the snot kicked out of it. And we all know what's happened since around 2021. We've seen bonds go from roughly 0% interest rates to 5% interest rates. We saw the market fall around 29% peak to trough. Internet and technology companies like Coinbase, Zoom, DocuSign, Amazon, Google, I mean, they've all really, really got hit hard. And now we're seeing the destruction in the regional bank index. So we know that this is about risk. But just say, for example, you're having a client, a prospect-facing meeting, and you send them a Riskalyze survey, and they come in around 53 to 55, which means that they're conservatively invested in growth and income. So we try to adjust and create a portfolio just for them. So what I did is I assumed that this couple that we're meeting with, or an individual person, has a risk score of 56. And so what we're going to do is just compare a standardized 60-40 portfolio with one that just adds a 4% position in Bitcoin. So what if adding 4% in Bitcoin is the what if scenario? So here we are. I'm sharing my screen with you using the Riskalyze program. A traditional 60-40 portfolio has a risk tolerance score of 57. So it's slightly above by 1 point our client target of 56. So it's perfect, absolutely perfect for a client, right? Say we're assuming a $100,000 portfolio. We're going to put in 60% in the S&P 500 via the SPDR SPY ETF. And 35% in the Vanguard Intermediate Bond Fund. And as you know, you guys can change these any way you want. But we're going to put 60% in equities, 35% in bonds, and 5% in cash. Your typical 60, 35, 5, okay? And we can assume here that our annual midpoint range of a rate of return that we might be able to tell a client based on historical performance is around 5.32% annually with a 1.96 annual dividend stream. And these funds are very low cost at 0.09 expense ratio. And in this corner over here, this is where our guardrails are. This portfolio historically can act like down 11.5 or up 16.76 in a 6-month time period. It's what we would tell the client. This is what you have to accept in order to be a conservatively invested growth and income client. But just for giggles, just for fun, let's say we're going to add a 4% allocation to Bitcoin. I'm not saying it would be appropriate for growth and income, but a 4% allocation to Bitcoin is not going to derail anybody's investment portfolio. So let's just write these down. We have a 5.23% annualized potential return, 1.96, and 0.09 on the expense side. And so let's just mute this so we can look at the other analytics. Now, this is basically a 60-40 or 60-35-4-1 portfolio that has 60% in S&P 500 SPY, 35% in fixed income, the same Vanguard Intermediate Bond Fund, but it takes a 4% position in the ProShares Bitcoin ETF that's available. The symbol is BITO, B-I-T-O, and a 1% cash rather than, say, a 5% cash in the position. Well, what happens here? The annual midpoint range drops from 5.3 to 4.18. Yeah, that's a little bit of a hassle. I would like to see something better than that. The annual dividend, though, goes from 1.96 to 2.04, and the expense ratio jumps up from 0.09 to 0.11. Well, why is that? Why do we see this? Well, surprisingly, and I got off the phone today with ProShares. As a matter of fact, today I called them up. I'm like, how does an exchange-traded fund, which invests in Chicago Mercantile futures contracts, pay a 4.11% dividend? Well, it ends up that only half of the AUM, which is almost $1 billion, they've got about $998 million of AUM, 460 million of that are in U.S. Treasuries, earning a decent yield. The other balance are invested in futures contracts at the Chicago Mercantile. And again, I was very, very surprised by that. I didn't expect to see that. So you could say that your client who has a risk score of 56 would only have to make a leap to a 62 in order to have a 4% allocation to Bitcoin. And the truth is, we could probably pair some of the S&P 500 off and add it to fixed income if you wanted to, because from my perspective, Bitcoin is risk on. It's like QQQ, it's like technology, it's equity, it's non-correlated asset class, although as we all know, in times of crisis like we saw Bitcoin go from 62,000 or 60,000 down to 15 or 16,000. Now it's back up to 27 or 28,000. So I don't want to diminish the volatility that Bitcoin has. But also what we can also say in 2023, Bitcoin is up 71%, at least this particular ETF is. While the S&P is up 7.5%, the regional Bain index down this year, maybe 20%. So, we have to make the trade and manage the risk. So I'm going to close this. So we're not really making a big leap from going from a 52, 55 conservative to a 62 by adding a 4% allocation to Bitcoin. And here at the ProShares website, I think there's a lot of really interesting and valuable information here. The investment objective of the fund. They have all the necessary regulatory prospectuses available here, and I highly encourage you to read them. And here's a chart of the performance over the last few years of Bitcoin. Obviously not very good, but you could also say that fixed income looks the same. Muni bonds look the same. The NASDAQ QQQ looks the same. There's a lot of asset classes you could say are very similar to this chart since the highs that we made in October 2021, when the Federal Reserve began increasing interest rates. And of course, they have a total return grid here you can also look at. But what I find kind of interesting, again, is the holdings are roughly 50% U.S. Treasuries and 50% futures contracts at the Chicago Mercantile. And we have May and June contracts that are being held. Again, very, very interesting. And so it had not paid any distributions in terms of dividends until 2023. And I'm guessing that's because interest rates were really nothing to share with investors. Although, according to the prospectus here on the website, the Investment Act of 1940 requires them to distribute any dividends that come in to their shareholders. So I don't think that the 4% dividend stream is going to be they're going to be able to maintain it based on interest rates. We're kind of end of a tightening cycle, so we'll probably see those distributions decline. But I do think it was interesting, and I'm very, very surprised an investment advisor that the BITO ProShares ETF actually pays a yield, which is really growth and yield, right? Technology and yield. So I found it really, really interesting. And I wanted to share that with you. And again, this is not an endorsement per se of this product. I'm just kind of doing this in a recording because I'm learning at the same time you are. And my clients really want to know what's going on with Bitcoin. I get a lot of emails on a weekly, monthly basis about Bitcoin and blockchain. Some people are very scared. They want nothing to do with it. But when you sit down and have a conversation with them and you give them a little bit of education, I think you can get them to buy in on the complete process. So again, I think it's really interesting. Here's a chart of Bitcoin since going back several years. You can see that this chart looks very similar to every other asset class that we've had recently. Although, to be honest with you, as of today, I think Bitcoin peak to trough is actually less than the KRE Regional Bank Index peak to trough, but you better check on that. So you could say, hey, banks are safe. Banks aren't safe. Bitcoin is too risky. Bitcoin's not as risky as regional banks. And yes, I know it's a one-off, but it is interesting to have the conversations with clients. So I just wanted to share that with you again, that BITO, the ProShares Bitcoin ETF, pays a monthly dividend distribution, which I think is really interesting. It looks as though the crisis is over in digital assets. Maybe a new bull market has begun there. And it's just one of maybe a dozen or so products that you can buy in an exchange as an exchange traded fund in a 401k or IRA without actually holding self-custody of the Bitcoin. So again, if you have any questions, feel free to send me a direct message here through LinkedIn. Follow us on the Spotify Blockchain Advisor podcast. If you have any questions, I would love to hear them, and I'd be very, very happy to answer those questions as the best I can because I'm learning this along with you. Thank you very much. This is Bill Ulivari, again, the owner of Senecal Capital Management, state-registered investment advisory firm. You can find us at senecalcapital.com or on Spotify, The Blockchain Advisor. Thank you very much and have a great day.